Hello, everyone.
Hello, hello.
Hello.
Here, are you able to share your screen?
Yep, give me a sec. Yep, there's not much to share in terms of SIP updates, because just want to focus on the Bitcoin MEV conversation. So I took most of the stuff we generally discuss at the beginning out. But yeah, just trying to focus on the SIP Bitcoin MEV conversation today. But yeah, looks like we got a decent turnout today, and I have invited different people who proposed, and also people from around the ecosystem, inside or outside stacks, because Bitcoin MEV does have an impact on Bitcoin, and there being some conversation on Twitter. So it's really interesting for different various people to listen in, I think. So yeah, just give a couple of minutes, and I think we're almost there, and we'll get started. Okay, why don't we get started? So yeah, welcome everyone to SIP call number 51, the 7th of July. We run this SIP call every week, just FYI, and it's a forum where people can come and advocate for their ideas. This week, we'll be talking about Bitcoin MEV SIP, how we can mitigate, and we have various people presenting. We will get into discussion about different ideas and find a path forward, because there's been quite a few different ideas on the table, and understand some are more more developed than the other, but we'll give everybody a chance, because we do have proposal from the core, but we also have proposal from the community who are not in the core. So like to hear everybody's idea, and then we can find a way to move forward. A SIP is essentially like a bit, but in a SAX ecosystem, and whether it's standard or non-standard, consensus breaking or just a standard SIP. So just for anyone who is here the first time, and I know some of you are here the first time, and this is how we go about specifying the implementation. And this code, like I said, is where you can present your idea, where you can advocate for your idea, but also we can work together on any idea together. And where we also give a bit of SIP status update on where everything is in the ecosystem in terms of SIP development. But yeah, just want to get into today's conversation. It's all about Bitcoin MEV and how we can mitigate that. So I think we have quite a few ideas on the table. So I was thinking we can go around and maybe have each idea presented, like elevator pitch idea, and then we can go into the discussion in more detail. So I understand. Can anybody who wants to present the idea sort of raise their hand and just put their name down in the chat who are here? And I understand Jonko has idea, and Aaron, and also DNG, if my understanding is correct. Yeah, so why don't we start with Aaron's idea, proposals, and would be great if you can share with the whole community who may be here the first time, what your idea is, what the problem is, what it solves. Yeah, why don't we start with Aaron? And if you want to share screen, I will finish.
Yeah, let me see if I can share a screen. I have like a sort of very limited, never before presented slide deck. So maybe make this work. Okay, great. Yeah, hello everybody. I'm going to be talking about a proposal that I shared on the forum for collaborative mining with threshold signatures as a future way to perform mining in the SAX blockchain. So the goals of this proposal are essentially to try to eliminate any coin-based reward based incentives for miners to attempt to crowd each other out of the protocol. So this means that miners either have no ability to push other miners out of receiving coin-based rewards or some share of coin-based rewards. Or if they do have that ability, it's not profitable for them. Then the second goal is to try to promote faster block production, primarily by eliminating competition for blocks. So the idea is to replace block competition amongst miners with something like collaboration amongst miners. This promotes faster block production because if you're not competing, then you don't have like a race to submit your block commit. And you can also have higher throughput limits on blocks because of that, because block arrival times don't affect the competitiveness of a miner trying to build on top of your block. And then finally, one of the overarching goals of this proposal is to try to retain the proof of transfer security scheme as it exists today in the SAX blockchain, so that miners become candidates for block production primarily or entirely through burning or transferring Bitcoin. Okay, so at a very high level, the way that this proposal works is that it defines something called block production terms. So these terms are sort of a configurable length, but I think it's best to think of something like a 10 Bitcoin block term. During each term, stacks blocks are produced by a producer set. This producer set is a group of weighted public keys. Every block in the term must be signed by a quorum of the producer set. Throughput limits in the stacks blockchain would be assessed on a term as a whole, so that the number of stacks blocks in a term is not limited to 10, and there's no distinction between like a microblock and a block. There are only blocks. The limit on the number of blocks in a term would be governed by something like the cost limits of blocks. So during a term, the producer set periodically will announce the latest block that they've produced on the Bitcoin chain by spending the term's current UTXO. These announcements produce a taproot output as defined by the weighted by commitment frost group. These announcements are not required to land at a specific Bitcoin block height. However, the last accepted announcement must land before the term ends. Okay, so how do we select these producer sets? So in a given term, let's say we're looking at term n, selection for that term occurs during term n-2. So it would be producers for the term submit a Bitcoin transaction containing a bunch of proof of transfer outputs, basically 2 times the term length. This ensures that the reward cycle slot count would remain the same as the current system. And then based on these Bitcoin transactions, the producer set is determined so that every would-be producer that submits a correctly formatted Bitcoin transaction during term n-2 is included in the producer set in order to ensure that the producer set does not grow to be infeasible to either compute or manage or calculate signatures over. There is like a minimum participation threshold of 1% of the total commits. So it is technically still possible for somebody to try to crowd out a very small committer, but they would have to expend a lot of Bitcoin to do so. And then finally, the first block of term n, it must build off of the last announced block of a prior term. So this means that producers still sort of retain the ability to fork prior terms, but they can't choose like an arbitrary slice of a term to build off of. And then the way that Coinbase rewards and transaction fees work is that Coinbase rewards are going to be shared amongst every member of the term's producer set. Coinbase rewards only occur if blocks are produced during the term. I think the exact details of this still require some specification. There's some questions on the forum post about this. And I think that sort of still needs to be hashed out, but yeah, and then transaction fees would be paid out according to a 40-60 split, where 40% of the fees go to the participants in the current term and 60% go to the participants in the next term. This is necessary to incentivize miners to build off of the prior term rather than trying to reorg the prior term and steal transaction fees from like a high value transaction or something like that. Yeah, and then that is all for my presentation on the proposal. If people want to dig into some more details, I was just looking at the forum post that Eurogamer just shared. Yeah, thanks all for listening.
So, Aaron, a quick question, and this might be sort of like assumption here, but you see this as a kind of like a Bitcoin MEV solution as well?
Yeah, I think it would be a Bitcoin MEV solution because if, or at least at the very least for the behaviors we're seeing today. So the current Bitcoin MEV behavior is that Bitcoin miners are able to, for the block that they're building, prevent other transactions or like other would-be stacks miners transactions from being broadcast. But because producer set selection occurs over a 10 block window, they would have to do that for 10 Bitcoin blocks or collaborate with others to do that for 10 Bitcoin blocks, which I think would be infeasible. And if something like that collaborative censorship is going on at the Bitcoin level, I think that the Bitcoin network has probably some other problems that it needs to deal with.
Yeah, those are the bigger problems to deal with at that point, I think. I think that's interesting, but do you think there's still something, because the current work that Avi has done, for example, like is that something that is replaced if people move forward with this proposal, or is there parts of the system in terms of how Coinbase rewards are distributed and that can be incorporated somehow?
Yeah, so I suspect that any other like that this addresses like the Bitcoin MEV concerns, or at least the concerns that were similarly addressed in the other Bitcoin MEV exploration work. So I do kind of think this would supersede that if we were proceeding along with this proposal. So yeah.
Yep, got it. I think one interesting thing to like talk more in the community and on calls like these is the trade-offs between, because the current research that has happened is more targeted towards the existing system, whereas this proposal is a much bigger change that's likely going live with the Nakamoto release. So one thing to think more about would be, is there benefit to pushing something live now with a hard fork, which obviously comes with its own overhead, versus kind of like not doing it and just focusing on this upgrade? Because there's broad consensus in the ecosystem that Nakamoto release is sort of like happening, even though, you know, vote still needs to happen and SIPs need to be written, all of that. But I think there's, at least what I've noticed, is there's broad support that there is a big change coming, right? So if this proposal is sort of like a front runner in the Nakamoto release, I do think the interesting question to consider is that should effort be spent on something that might get superseded within 6 months or less, right? So that's I think that's an interesting topic.
Yeah, I agree. And I guess my own feelings on this are that if there does seem to be like an imminent plan that would supersede other work, and that, you know, there seems to be like a clear path towards implementing it, then it's probably better to not try other measures first. So just sort of focus on shipping the like final idea that people have. So yeah.
Can you speak more, Aaron, to how the system retains POX and proof of burn?
Sure. So the idea is that the would-be producers for any given term are still like they're still facing basically the same decision-making process that miners are facing today, where they look at basically the expected rewards that they're going to receive over a 10 block window. And based on those expected rewards, they issue a commitment on the Bitcoin chain, which pays to some outputs, either proof transfer outputs or Bitcoin burn outputs. And they do not require like approval or sign off from existing stacks holders. And so determination of proof of transfer outputs would use essentially the same mechanism that it uses today, where it's fetching that from the POX contract state. That contract state is determined through the prepare reward phase system that we have in place today. So I don't think that this proposal sort of really changes any of that too significantly.
To drill down that a little further, do you have to make a payment to like 20 POX recipients or so because you're sending one transaction for the next 10 Bitcoin blocks?
Yes, exactly.
Okay, that's gonna be big. Is that
Yeah,
okay?
that's true, but it is in aggregate still smaller than the 20 transactions today, right? Or
This
the
is true,
10,
yeah.
10 transactions, yeah.
Yeah, so I think for space efficiency, there might be actually like some small gains. Like I think Aaron, we talked about it, maybe 10-20%. But in terms of, I think that one change is that maybe miners are now sort of like they need to think about mining profitability over a longer time period, right? Like you have to think of in terms of like 10 block windows versus maybe potentially smaller, even though given like the mechanics even today, I don't think miners come in for like 2-3 blocks anyway, right? Like they have to think of like slightly longer time windows.
Yeah, exactly. Especially given that in the system today, minor commitments are evaluated over a 5-block window. So there's like some medianing that happens over the 5-block window. So they already sort of are thinking on a multi-block time horizon, no matter what. And then, yeah, in terms of space savings, I don't think that's that great. There may be other fee savings, which are probably higher just because the transaction doesn't need to be included in a specific block and you're less likely to need to RBF. So the fee rates that miners could be expected to pay would probably go down.
Would there be a similar windowing system? One we have in place today is put in place so that miners can't just wait for their POX rewards, assuming they're also stacking, to come up for a reward and then just blast out all the Bitcoin they can muster so they can guarantee a win on the block, but then get all their Bitcoin back for free. Would we similarly have like, your weight in the system is like a median of like the last 2 or the last 3 10-year windows or something like that?
I'm not sure. I mean, I think when I was sort of originally thinking about this, my answer would be no. But there may still be some benefit to windowing, even though the relative benefit that you're getting from having a POF slot is reduced because you're making a payment to 20 at a time, which is similar to the benefit that you'd accrue before, where like you're medianing over a 5-block window. If your POX slot is in that window, you still actually have a benefit from spending more during that window. Yeah, but it's definitely, I think, something to think about.
Can you speak more to how this addresses the orphaning problem, which is another big contentious problem we have right now?
Yes, totally. Yeah, so the primary thinking around the orphaning problem that we're seeing today is that one of the supposed benefits or theorized benefits that miners are getting from orphaning other miners' blocks is that if they do this for a sufficiently long period of time, they drive down other miners' profitabilities and then crowd them out. This is not as beneficial or beneficial at all, maybe under this proposal. I think there's some discussion on the forum. I think Bryce asked a somewhat similar question on the forum, and I reasoned through a little bit of why crowding out is so expensive in this approach, but the key point is that participants in a term producer set are not optional. Like if you submit a Bitcoin transaction, you get to participate as a producer, and you receive a share of rewards. So if someone was trying to crowd out your share of rewards, they would actually also be reducing their own profitability, and they'd be doing it at an ever higher cost to themselves to crowd you out. And then the benefit for them would be rather limited, because even if they've created this cost for you, you could actually always come back in, join again, and start receiving rewards again.
Right. I was thinking of a case where like they might orphan the last 10-year slot, for example, deliberately. Like they're still going to make Stacks Coinbase rewards for both the replaced 10-year slot and the new one they produce.
They would not get the Coinbase reward for the slot that they replaced. They would get the Coinbase reward just for their new term, right?
Right. But I mean, if I make slots n and n+1, and then I go mine n+1 prime, which is a sibling of n+1, and then I mine slot n+2. I'm not getting the original Coinbase for n+1, but I am getting it for n+1 prime.
That's true. But to what end? Like if you were a participant in n+1, then like why do you want to fork it away?
I mean, if the goal here is to crowd people out, it's not about you wanting to give money up. It's you wanting to stop somebody else from making money.
Right, but it comes at a cost, and this, the cost is very, very high, and then the benefit is much, much more limited. Because like in the current scheme, like you're getting a probabilistic payout as a miner. So if you're a miner that is only mining, say, 10% of blocks, getting reorged is like intensely damaging to you, because you have to spend at the same rate for like another very long time before you expect to receive another block. Whereas if you are getting a share of all Coinbase rewards, even Coinbase rewards where someone is forking away a prior block that you participated in, then you're actually still receiving funds, and the cost benefit of being crowded out is like wildly different.
Regarding receiving those tokens, do I have to sign the blocks in order to receive my share, or can I just freeload?
No, you can totally freeload. Yeah, so every member of the producer set receives Coinbase.
Does that also pose like a moral hazard? Like, why would I even bother running a Stacks miner at all then?
Because you only receive Coinbase if blocks are created.
I know, but it's kind of like I'm not saying it's like a huge deal. I'm just trying to tease it out just for completeness. Like, you know, someone's going to have to bear the brunt of running Stacks nodes that troll them in pool, produce blocks, send them out, and that takes time and energy and money to do. So you would see like industrial players doing this for sure, but like there's certainly an advantage of getting the same kind of Stacks payout without having that operating cost.
Right. So I think that I'm not sure if I mentioned this in the slide deck, but I think I mentioned it in the original proposal. Transaction fees only go to people who signed.
Okay.
Yeah.
So your transaction fees pay your OpEx.
Yep.
Okay.
How about what do you guys think if we let a couple of other
Yeah, I think that's probably a good idea. Yeah.
Sure. Sorry, I'm excited about this.
Great.
That's great. Actually, can I ask a very, very brief question? I'm just trying to clarify. Is this part of Better Blocks or is it separate?
So I think that like Better Blocks is an umbrella term for safer blocks and faster blocks. And safer blocks and faster blocks mean everything that encompasses more safety in the consensus protocol, and then higher throughput blocks or lower latency for blocks. And I think that this proposal is sort of fits into both.
Yeah,
I see.
I think it sort of combines the two, right? So if you're moving to like other proposals, I'll just make a quick comment here that earlier, like I've had discussions about this proposal with Aaron, and I really like it. The earlier stuff that is maybe even in the current version of the paper, I think is slightly different, right? Like it doesn't have the concept of the terms in that proposal, and I worked on it with different people before. There is a separation between fast blocks and settlements, and it doesn't have this termlet over there. But I am more than happy to sort of like withdraw that proposal for simplicity instead of like debating it, what's better and not. And because I really like Aaron's proposal, and I actually think it's superior. So I'm happy to just like withdraw that proposal.
Yeah, likewise for mine. I think Aaron's is a far cleaner design than anything that I've written up, and I would get behind either Aaron's verbatim or some variation of Aaron's once we found out all the details.
Cool. So Jude, your minimum bid and lifting off, what you're saying is dropping those two, right?
Right. I mean, Aaron's proposal achieves the same ends as the lifting off proposal does, but it does it with a far simpler design.
Oh, yeah. Thanks, Aaron and everyone. Let's hear Junko's idea, because he's got a really interesting idea too. Junko, are you here?
Yes, I'm here.
Yeah, really appreciate you coming. Do you wanna, if you wanna share your screen, or do you wanna just share your idea?
Yeah. I didn't quite come prepared to share my screen. I did put out a video. I don't know if you guys all went through that. It's like had the slides and everything in there. If you like to follow along through that set of slides, or let me see here. Do here. Okay, yeah, I think I can share my screen here.
Yeah, please go ahead.
Okay. Can you see everything?
No.
No? Let me troubleshoot. Oh, okay, desktop one, okay. Okay, share. Grant privacy, grant access, hold on a second. It will need me to like rejoin and reboot this thing. If it's okay, I can just read off, the slides in front of me, if that's okay.
Sure.
Yeah. So yeah, so the idea is called the stacker signing, and what the proposal mainly is well, it's to basically make reorg more difficult by making the 51% mining attack just much more expensive, right? So currently it is based around the block reward, and so to do that, you just overbid, and you can crowd people out, and then basically control that. So the idea is to make the 51% attack really expensive by requiring them to control 51% of the stacking slots. So that's pretty expensive, because it would be like $500 million to $1 billion to buy up the tokens in the market to do that. And then so that makes the whole Nakamoto consensus work, because then the 51% it's difficult to execute on, and then it also bonds the person that wants to do the attack. It makes them consolidate their capital, it makes them bonded to the network but economically. And then the Nakamoto consensus is just it's just statistical sampling of the decisions of these bonded participants. So it's a continuous sampling. So you don't have to like get a quorum or anything, because the statistical sampling essentially takes those characteristics and very efficiently does it without having to like gather everybody and sync up and handshake and all this stuff, because it's a continuous sampling. So yeah, so that's basically the idea there. And then you basically get a $500 million to $1 billion security. Difficult to attack. A nice little thing which I just kind of thought of is the really like turbo blocks feature. So when we pseudo random sample the stacking slots, well, we can do it anytime. You don't have to do it at a anchor block cadence. You can just do it anytime. So this potentially you can just go as fast as the network can propagate and get the same, $1 billion security. Yeah, so that's kind of like the benefits of this thing. If you have any questions, I'm happy to answer anything or adjacent topics. Oh yeah, and how does it solve the Bitcoin? It also like helps with the stacker deals as well, because now that we lift the chain extension away from the block producers, all the block producers are now just competing freely. They don't have a chance to reorg away rewards. So we should be able to get really close to like really maximize our yield. People should be paying really close to what the block reward is worth for the block commitments.
Thanks. Thanks for sharing that. I have just a quick question, just from my understanding. So is it fair to say that the BTC STX exchange that's happening, and I assume it's still happening,
Yes.
that's not linked to mining anymore, but mining is really done by stackers effectively?
Yeah. So what's happening is the word mining is actually a very confusing term, because there's block producers and then the stackers will do the chain tip extension. So you can look at mining as the task has been split between two separate actors. So the block producers can produce blocks, but they can't write to the chain. And then the stackers are the ones that can write to the chain, but they can't necessarily select the block that gets produced.
So when I read this proposal originally, I thought it was a really good idea, and I still believe that. Anything that allows us to leverage the stacker's economic value to secure the chain is a win for sure. Can you speak more to how the system behaves when an entity performing block production is also a stacker?
Yeah. So if they want to do this, and I actually in the post I actually went through this example. So assuming that they want to, their goal is to create like a secret fork, and then like basically reorg the chain, right? So what they would do is, if they control the block production, the thing is, unless they control 51% of all the stacking slots, they would still have a almost very difficult time to try to reorg the chain, because they can produce a block, but they can't keep it in secret, because they have to basically archive it with the stackers. And then if they win the sortition, the stackers then basically look up that block and broadcast it to the network. Now, if they happen to, if the miner happens to control the stacking slots that are the chosen stackers, they can. If they happen to control both of them, then they can withhold that block and keep it a secret. But the chance of that happening is very slim, unless they control the vast majority of the stacking slots. So that's what makes it difficult to perform you know, the MEV, the reorg attack.
Cool. If anybody got any other questions, if not, because we still have DNG who has an idea. So how about we go to DNG? If he's still here, DNG?
Can you hear me?
Yep.
Cool, I'm trying to share my,
Is that your smoothing idea?
yes, I can share my screen now. Can you see my screen?
Yep.
Okay, so the idea here is only to address the Bitcoin miner issue. Basically looking at these, the graph we're looking at is a sequence of 30 blocks, in which we're looking at the total amount of sats committed for the POX transactions. The blue line is the current, how things are currently going. And so the problem spots are here where it's hitting 0. And if we can look at that along with, just kind of ignore the red line for now. But this is the probability of win for each of these 6 miners. And the trouble spots are where this is 0 and this is 1. So this is the miners guaranteed the win with 0 commitment of, near 0 commitment of sats for the block. And so the idea is basically to take the commitment that is made over the past 6 blocks and use that toward the calculation for the probability of win. So we're looking at, currently this is the probability of win based off of the amount of the amount committed for each POX transaction. And we see the jumps up where they're the only miner there. But so we have the jumping from 0 to 1 and kind of all over the place. Smoothing, taking the transactions. The number I was using was the past 5 blocks. Will allow that to, at least for the amount of minor transactions that we're seeing, it smooths it rather well, getting the miners near about 25%, a little higher, a little lower, depending on where their amount of sats that's committed kind of ranges. But the big thing being is that here on this chart, we don't see an orange and blue line. They're way down here. There's near 0 probability of them winning. And that kind of, so if we are extending out your probability of winning based off of your POX transaction, it would also make sense to then smooth how those transactions are attributed to each of the blocks. So if we smooth out the POX the sat that's committed for each block, we start to look at the red line then, as opposed to the blue line. And even with some situations of having near 0 sats committed for different blocks, we're still well above 500K sats per each of the blocks. So basically the idea is taking the amount of POX, the sats that's committed for each POX transaction and smoothing that across some number of blocks. 5 seems to work out well because of the division that's involved. If we do anything that's a multiple of 3 or 7, the math starts to have trailing digits. So that is the solution that's proposed. Again, this is only to address the Bitcoin miner issue. This doesn't, it would have to be paired with something in order to get to the block orphaning. Any questions on that? Cool, thanks everyone.
So if I may ask maybe each SIP author, like what is for like risk wise, what are the biggest risk or concern with your proposal? Yeah, maybe it would be good for just for due diligence or for informing the community. Maybe we'll start with Aaron.
Sorry, what was
What's
the question here?
What's the biggest risk for each of the proposals? So for yours and for DNGs and for Junkos.
Yeah, so I think that for my own proposal, I would say that the biggest risks all kind of fit into a broad unknown category. My proposal does change some of the incentives around how miners behave. These changes in an incentive are not tested in practice. So like we know how miners behave today, but we don't know how miners will behave in the future with these incentive changes. So that's a major risk. And then sort of following up from that, I think that there are still some areas, probably more than some, but there are definitely areas of my proposal that require more design and hashing out. Just thinking about like how threshold signatures could work in my scheme, the relationship between these block announcements and Coinbase rewards, and you know, the sort of UTXO history. All of those things I think are just like details that need to be hashed out, and you know, they could end up complicating the design some. Those I think are the big risks for mine.
Yeah, one quick comment there that I think I saw this in another working group as well, where there was a proposal that for any of these things, I think there can be a parallel study by some folks who specialize more on incentive design, where we can see like, hey, how the changes can impact the miners. So I agree that I think it's an important topic, but I also think that it is something that there's a very specific skill set for it, and there are people in the ecosystem with that skill set, and they can probably do some work on it in parallel.
Cool. What about Junko?
Yeah, I think the most untested part is just basically running a stacker node and making sure people will sign sign over those blocks, because I think just I didn't put this thought down on paper yet, but I think, you know, Jude did mention like maybe we may penalize people that don't sign, you know, blocks, and they won't get the Bitcoin rewards. But I think I'm leaning towards there's a reason why Bitcoin rewards should always be given, even if blocks don't sign, just because some blocks may not be signable because an attack could be taking place, and so there should be a cost for attack. So whether a block gets signed or not, like Bitcoin rewards, POX rewards should be paid out. So I don't know if that creates maybe what do you call that, tragedy to commons type stuff, but it shouldn't. But this is just me speaking out loud. I'm speculating on that. So I think that's the main thing. I think the rest of the proposal is pretty conservative in terms of we don't really touch a whole lot of other stuff other than really just stacker science. So that's my take on it.
Well, what about DNG?
So probably three major risks I can think of. The first being is that just generally that it does not do anything to resolve the orphaning issue. That continues, then it helps to solve the Bitcoin extracted value issue, but the orphaning really does need to be resolved as well in addition to it. So the solution there goes toward fixing orphaning issues might supersede the implementation for smoothing. Second issue being if Bitcoin miners globally adopt this strategy, which is really a black eye for the Bitcoin community of how they trying to block out other people by censoring transactions seems completely against the culture of Bitcoin. But that aside, but so the third issue being that basically that a Bitcoin miner could continue to, if they win more blocks past whatever the value we set, that would then kind of get around the smoothing. But those are probably the three major issues I can think of.
Cool. Thank you so much for sharing. Yeah, so I don't know, how do we go about from here? Now we have different ideas on the table. I don't know if anybody got any ideas how we can move on from here. Do we do like temperature votes, or how do we go about moving to a final solution or selecting the final solution? Anybody got any idea?
Look, I'm just an outsider. I don't represent any particular group or interest. I'm just a hobbyist, cryptocurrency hobbyist. So the thing that stuff that I present is just purely information. So if people like it, you guys have to make it your own, because I'm not a core community member, and I'm not going to write the code for this. So I'm happy to help answer questions, but everything I say, I'm not really trying to push for any particular thing. I'm just trying to present some information out there. So that's my perspective, where I'm coming from.
No, we're truly appreciative for you chiming in to this conversation. It's exactly what we need. So thank you so much. Jude or Aaron, what do you guys think?
Yeah, I think that it is probably the best approach is something like the sort of core engineering team, or like the Better Blocks working group kind of come together and try to coalesce these proposals into a single proposal. The sort of sense that I'm getting is that there seems to be a lot of support from core engineering members on my proposal, which I think is great. And I think that these other two proposals are like very strong and also present like, I think, very good information on like what things we should be thinking about in sort of the final proposal that could get translated into a SIP. And I think that probably a good next step is for the Better Blocks working group and core engineering team to like try to take my proposal, fill in some details, but also really think hard about like what aspects of the other proposals could possibly be incorporated, because I think that probably is a useful exercise.
Yeah, agreed. Each of these proposals has a lot of good ideas, and then I think that whatever comes out of this working group is going to combine ideas from multiple proposals.
I'd second all that, and I'd just like to reiterate something I mentioned before. Based on feedback from community and from CAB members, let's try to make sure that the SIP for this happens before the implementation is all done, because when it's ordered like that, such that the SIP vote happens like basically after everything is ready to go, then people feel like the vote is kind of a too big to fail rubber stamp event. So I'd like to push for the fact that we get the SIP out earlier rather than later.
Yeah, I agree for the SIP, and I think it also, like in the working groups, it will help to hash out some of the protocol level details so that it's no longer like, just a proposal, but actually is, we start hashing out some of the details as well.
And if DNG and Junko, if the core engineers need some advice or questions from your proposal, are they okay to contact you?
Yeah, you could just reach out to me on Discord.
Cool.
Yeah, likewise as well.
That's great. So to summarize, I think we will take all the different ideas, and the working group can study them and propose a way forward for the final proposal. Is that right?
Sounds about right to me. These are all public calls too, so it's not like
Yeah.
the working group has like the final decision on things. We always welcome continuous and iterative feedback.
Do you know which calls specifically? Is it the Tuesday one or?
I just got back from paternity leave, so I'm actually not sure, but I do know that we all do them publicly.
Okay. Just wonder
There
which.
is a question here on just like general timeline, and I know obviously things are going to be a work in progress, but is there maybe like a potential target for maybe an updated proposal?
I'm sorry, a potential target for a what, Gina?
For an updated proposal, basically the compilation of these proposals.
My personal hope is to have that done by the end of the month, that we can have a SIP that we more or less all agree with. There will probably be details that will have to be ironed out as the implementation progresses, but they shouldn't be surprising.
Yeah.
Hey guys.
Oh,
sorry, go ahead.
I agree with that, and would say that we should kind of think about that as like the furthest deadline we would want for like a more fleshed out proposal. Like maybe try to go even more aggressive and have like SIP draft, like first version of the SIP draft in a week or 2 weeks, something like that.
Yep, and I think I brought this was a separate meeting, a working group meeting, but over there are certain parts where I think even some engineers can make code progress because they need to be there anyway, like regardless of which exact iteration of the proposal goes live. Like, one example is the BDF, right? Like that should start getting implemented. But this is not the meeting to discuss that, but I think I can bring it up in a working group meeting.
I was just wondering, once the final proposal is okayed, what does the workflow look like from that point to actually shipping to mainnet? Is it like a test net or a private test net and then the actual test net? I'm just curious how that works for something like this.
Oh, it would absolutely go live on testnet before anything else. It would have to be implemented, put into a branch somewhere. We would run it on testnet for some time. There would be, if you read SIP 000 and just look at how some of the other hard forks have been ratified, this is naturally a hard fork type of thing. So there would need to be a stacker vote to activate the new system. Once that activation happens, we would know the Bitcoin block height at which the new algorithm would start taking effect.
Yep, I'm familiar with that. Thank you.
Yep.
All right, thanks everyone. It was super helpful.
Yeah, thanks all the community contributors, Jonko, DNG. Yeah, I think it's so great to see the new SIP being improved because of your contribution. So thank you guys so much. And yeah, I think it's the top of the hour, so let's finish it here. And this call is on every Friday, so feel free to join and propose any other ideas you may have. Yeah, so see you next week. And thanks everybody for coming.